My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. I'll be one of my friends just trying to make you some money. My job, not just to entertain, but to educate, teach, get you excited about this stuff. So call me at 1-800-743-CNBC or tweet me at Jim Cramer. Nothing takes the Fed out of the equation like a weak employment number. And today we got the weakest one relative to expectations that I can ever recall. A miss of 744,000 jobs. That's right, the experts predicted we'd create 1 million jobs in April. Instead, we got 266,000. I would fire every expert. All right, now you think that would be bad news, right? I mean, much miss in terms of how few jobs were created. Wrong. For the stock market is great news, which is why the Dow gained 229 points, S&P climbed 0.74%, both all-time highs. NASDAQ jumped 0.88%. Even the NASDAQ was up. The big concern right now is that a booming economy will force the Federal Reserve to slam on the brakes by raising interest rates. And a huge part of that was the fabulous job market. Yes. But with such a disappointing employment number, Fed Chief Jay Powell has bought some time here. He's got a lot more leeway to leave rates unchanged. As long as the unemployment rate's above 6%, anyone who says he needs rate hikes, I got to tell you, that person really does sound like a crank. They know nothing! Of course, we know that inflationary pressures have been building pretty much everywhere. I know that. I'm not oblivious, even if some of them are temporary. I don't think lumber's always going to be up here. I don't think corn's always going to be at $7. But we know the job growth may have been held back by bountiful expanded unemployment benefits. Lots of employers either can't or won't match those payments, so you can't really blame anyone for taking the money and staying home. I personally have been willing to far exceed what those employment benefits play, but there's so many other aspects of those benefits that are positive. We're not even getting any takers. But even with these issues, the Labor Department's non-farm payroll report is considered sacrosanct, and it gives Powell the cover he needs to keep rates low, which in turn means stock buyers have another month where they don't need to worry about the Fed. The result? Huge gains today for all kinds of stocks, with the best performers being the bigger cap tech names that roar when the economy seems to be downshifting and inflation remains low. Even if the economy may be doing the exact opposite, inflation is still very much on the table. Can this incredible bullish scenario hold up? Well, we're not going to have to wait too long. I'll tell you why we don't have to wait too long. Because on Monday morning, we get a result from a company that's very sensitive to all the issues we're talking about when it comes to inflation, which is Tyson Foods. We'll hear about whether the budding chicken shortage is going to drive up prices, probably hear about the price of corn. As is, animal feed keeps going higher and higher. Food inflation is getting out of hand. Will that be ignored? Hard to imagine. But it comes right in the shadow of this benign jobs number. So again, it probably won't matter. We also hear from Marriott International. I'd be very much like to see what their bookings look like. This morning, Expedia told us that pleasure trips are filling hotels, but business excursions haven't come back much at all because everybody's still using Zoom. You might be surprised after the close when one of my absolute favorites, Simon Property Group, reports, and I bet they shoot the lights out. Simon's the biggest mall operator, and it's doing incredibly well. Hey, as Don Wood, the CEO of Federal Realty, the largest shopping center owner, those are two different things, has already explained brick-and-mortar retail is booming, at least in wealthier communities. That Simon bread and butter is right there, so I think the numbers will be monstrously good. They own A malls. That's not a mall. It's like the great. Occidental Petroleum reports, too, and we've been getting some stellar numbers from oil producers that are feasting in this environment. Crude sells for more than $60 a barrel. They make money there. I bet Oxy's one of them. I also like Roblox, the beginning gaming platform for young kids. The safe beginning platform. The company came public in one of those direct listings that tend to undervalue stocks. I think this may be your chance to buy shares in a fast grower before it gets closer to a full valuation. Some people think I like it too much. I don't know. I like it a lot. I think it's a smart company. Speaking of companies with mispriced direct listings, Palantir reports Tuesday morning. And this is one of those stocks like GameStop or AMC that's beloved by the 10 million degenerate Wall Street bet crew over on Reddit. They call themselves degenerate. I only echo that. They pride themselves on moving stocks, though, even if the fundamentals don't merit it. Ha, ha, ha. So I think this could be another opportunity to do some buying. Stock's down big from the mid-20s where they had driven it up to. After close Tuesday, we're hearing from a company that I'm focused on because it's in my living room, Vizio. Smart television company that can give us a read on both cord cutters and the semiconductor shortage. I often think of Vizio in tandem with Red Hot Roku. Did you see that? That stock is cool, but then went up nicely after it reported last night. They had a good quarter. Now, I'd say it is at least worth listening to Vizio, get another view of the situation. But I hesitate to recommend it because of the chip shortage. Ultimately, I think this can become a big stock, but this may not be the right time for it. Wednesday morning, we get results from Wendy's. Now, lately, it's got a nasty habit of going down on earnings, then rallying later on. As much as I like it and champion Wendy's endlessly, as does my wife champion that Baconator, which, you got to go to Planet Fitness right after. We have Planet Fitness right after. You think you probably want to see a quarter before you pull the trigger. Next up, Match Group reported an amazing quarter this week, so I have to think that this online dating competitor, Bumble, can do the same next Wednesday night. I like Bumble. Now, it only came public in February, but it already sunk to its 52-week low earlier this week. I told you people turned on IPOs. Now, this setup for this woman-first online dating play, I think, is very good. Of course, if you own it all the way down, you hate to hear what I just said. It sounds a little like Kathy Wood in that amazing interview with Sarah and Wilf, where she liked the fact that she had taken a beating on a bunch of stocks. I like it when stocks go higher. Sorry to be critical. Do you know that Grow Generation, the hydroponics retailer that's become a key player in the cannabis supply chain, tends to soar after reports? I bet this time will be no different, especially as more cash-strapped states embrace legalization in order to pay their bills. Early Thursday morning, we're going to hear from Alibaba. Okay, now why does this matter, other than the fact that it's already trading the moment you come in? Because it's the only Chinese stock I really champion on the show. And I bet you it gives you a terrific quarter. Remember, China's well ahead of us when it comes to their post-pandemic recovery, and Alibaba should put up some excellent numbers as Chinese consumers rebound from tough times. Thursday evening, it's a stock picker's paradise. Disney, DoorDash, Airbnb, Coinbase, all report at once. Of these, I think Disney's got the best story going forward. I'd be a buyer. DoorDash has lined up some amazing partnerships during this pandemic. I think it can make good money now, but maybe not great money because so many people want to dine in person now that they've been vaccinated. Airbnb might tell a terrific story, but the stock's really expensive at a time when the market has turned against the highest flyers. But remember, Airbnb is not business, it's pleasure, and pleasure is booming. As for Coinbase, it's a mystery. Given the crazy crypto world, its business should be booming. But because it came public via dreaded direct listing, we have no idea where the sellers are or what the darn thing's really worth. I don't trust the stock price. I do like the story, though. Finally, on Friday, we get retail sales. And I think you're going to see a super strong number, a barn burner. If it weren't for today's weak employment number, we might see a surge in bond yields on this retail sales figure, with the Fed pressured to tighten. Fortunately, the labor report trumps retail sales. But I'd argue retail's the real comeback story right now. And that means we're likely to have more than just temporary inflation. But who knows? Maybe it surprises to the downside, just like the labor report, although I certainly doubt it. The bottom line, I know the conventional wisdom says sell in May and go away, but that stupid ditty needs to be retired, at least when it comes to the first week of the month, when lots of people who hold on to the stocks did quite well, didn't they, and weren't freaked out by that. Well, never mind, I don't want to say it because it's a family show. Now that the Fed remains our friend, I bet we can keep climbing. Let's go to Gary in California. Gary.
Hello, Jim. This is Gary calling from Big Bear, California. How you doing?
I am doing well. Good. How about you?
Just fine, thank you. A while back, you gave an endorsement for American Tower, symbol AMT. And based on your endorsement, I've been following the stock for a while before I buy it. I got a notice on my phone the other day that has me questioning some things, and I'd like to discuss that with you. It announced that they're going to raise capital by holding a public release of another 8,500,000 shares of stock. Mm-hmm. And that has me, wondering what that will do to the distribution of the yield, the payout ratio, and some of the other metrics.
All right, well, I can answer all this for you, Gary. It was a great thing. They ended up upsizing it to $9 million. It priced at $244. And just to show you how much people love the stock, it went out today at $247. That shows you there's strong demand. People want the tower stock's dividend staying at 2. I prefer Crown Castle, has a higher dividend and a better growth rate, CCI, and it's been a huge winner for ActionAlertsPlus.com, my charitable trust. Let's go to Paulina in Virginia. Paulina.
Hey, Jim. My question is this. During the past 52 weeks, Novavax, a 33-year-old company that has yet to produce a vaccine, hit a high of $331 per share, albeit receiving a $1.6 billion contract from the federal government. BioNTech, a 13-year-old company whose only vaccine is the COVID vaccine, hit a high of $213 per share. Moderna, a 10-year-old company that has only produced the COVID vaccine thus far, has only reached a high of $189 per share. Moderna also received federal funding of almost $1 billion, plus a $1.5 billion federal contract. Moderna had by far the highest.
Well, I can tell you the answer. Novavax isn't worth what it's selling for, and Moderna isn't either. Novavax should be lower. Moderna should be much higher. That's because Moderna's got so many other things in the fire. I love that company. I think it's terrific. But you know what? Meg speaks to them in the morning, and Meg's fabulous, so I'm not going to try to pry it away from her. But, man, I had it on first when the stock was at 18, and I said, ooh, smart guy. Oh, a miss in the jobs number turned out to be very good news for the stock market. And with the Fed on our side, well, I bet we can keep on climbing. We'll make it tonight. As more people become fully vaccinated across the U.S., does Planet Fitness look to be in good shape in this market? I'm sitting down with the CEO of Journeys. Then actress Jessica Alba's longest-running role has become rather lucrative. Shares began trading Wednesday in the company she co-founded. But is it worth getting in on the honest company? I'm going to give you my honest opinion. And following a surge of pet adoptions thanks to COVID-19 pandemic, is Elanco Animal Health in a prime position to benefit from the trend? I've got the CEO. So stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.
Shepard Smith here. Thanks for watching CNBC on YouTube.